On today's episode of the Cryptoverse. First of all, a market roundup consisting of Bitcoin, a look at Wax making a parabolic move, basic attention token, and Bitcoin Cash. Then we'll move on to talking about the founder of EtherDelta having been fined by the SEC, even though he doesn't own the exchange anymore, and even though it's a decentralized exchange. Then we'll move on to talking about the EOS Referendum Contract going live on the mainnet in beta form. That's a big milestone for the EOS network, so I'll talk about that. If you'd like to skip ahead, timestamps are down in the video description. If you're new around here and you want to get rid of the ads, support the show, and earn cryptocurrency rewards, please check out the website, which is thecryptoverse.show. If you click on that big blue button there that says Get Paid to Watch, there's a 2-minute explainer video that will explain to you how you can support the show, get rid of the ads, and earn cryptocurrency rewards. What could be better than that? For now though, we're going to get into the content. So we'll begin with this market roundup. So the market cap continues to retrace after this bounce off of that $220 billion resistance point that I've been speaking about this week. Here it is, right here. This is the same chart we've been looking at. If I go into the monthly view, there's the bounce, there's the retracement right there, coming down towards the $200 billion market cap figure. Now in terms of charts, Bitcoin, since it accounts for more than half of the total market at 52% dominance, well, because of that, the recent bounce off the 80-day EMA will mean that it's pulling down the overall market cap. So what that looks like on the charts is this. So this is Bitcoin's price against the US dollar on Coinbase. And like I say, the bounce off this 80-day EMA is also now pulled back to pull it below the 20-day average price. And that's pulling the overall market cap down, which is pretty normal. Wax, though, continues to excite. Let's bring up Wax here. Wax against the US dollar. So this is that channel that I drew the other day that was perfectly intact, but now it's escaped it. Well, this is the beginning of a parabolic move. Look, this is a cyclical uptrend. So you have the phase 1 to the top of the channel, the phase 2 to the bottom of the channel, phase 1 to the top of the channel, and then ordinarily you'd resume a phase 2 of the cycle, and on we go again. However, it's a steepening, accelerating move. That's why I say it's the beginning of a parabolic move. And even though there was some attempt at a sell-off here with this long tail, well, the vast majority of the trading range is in the top half of the candle, which is bullish. Interesting stuff. Now, since Wax's network activity is increasing faster than its price, that indicator I talked about this week, which is the Activity Valuation Index, it's grown now to 7,955. The other day it was like 6,600. Some people were asking me where the hell I get this data from. Well, it's Blocktivity is where you get this data from. Wax is the #1 most used blockchain in the world, with a 5 million 5 million transactions over the last 24 hours, 4.5 million per day average over 7 days, and actually it got near its record. The record was 5,090,000 transactions in a day. So if you take the market cap and you compare it as a ratio to its number of transactions, that's where you get the AVI from, which Wax is 7,955, which completely destroys every single blockchain in this list. And Bitcoin would be 1.0, so it's the benchmark. And like I said yesterday, EOS, by comparison, because it has such a huge market cap, it has similar network activity to Wax, but because the market cap is so huge by comparison, its index in terms of activity versus its value is so much lower. So Wax is absolutely killing it on that metric. Now then, next thing is basic attention token is oddly one of the biggest losers of the day today. But if we look at the charts, which it will give us some more context for this, because if you look at the price on any given day, right, it'll give you a distorted view. What have I done with my basic attention token chart here? I'm gonna have to type it in. BAT. Let me show you what I'm looking at here. Let's take a Binance view in US dollars. This is the chart I want to show you. So basic attention token looking like a big loser, yesterday and today. But like I say, if you look at the charts, it gives you a much better perspective. So clearly, just like Wax, basic attention token is in a cyclical uptrend, which again we could draw a channel for this quickly. If you just join some lows up here, I'll do this really roughly and then extend the channel out like this. It's pretty much obeying it, even with this big head, right? So all this is a phase 2 pullback to the bottom of the channel, which, all things being equal, if it's going to continue this uptrend, it's going to resume, hit the bottom of the channel, and then do a new phase 1 right up here to what, I don't know, 44 cents ish. Now this is in line with, not in line in terms of price action, in line in terms of time, with basic attention token now officially trading on Coinbase Pro against, what do you think it's trading against? Of course, USDC stablecoin. So I've got my Coinbase account open here, where you can look at it if you want to. Here it is, BAT trading against the USDC. Lots of trades going on right now. 14 million BAT traded in the last 24 hours, but a 24-hour move of 16% down, which is what we just saw on the charts. But that doesn't give you the full story unless you look at the wider context. So I see a trend here, don't you? Not a trend in terms of the chart, a trend in terms of behavior. Coinbase is going to continue listing newer assets on its exchange, but I reckon they're going to list them against its own stablecoin, the USDC. That seems to be a bit of a trend for them. Why wouldn't they? Right? Of course. So let's look at Bitcoin Cash real quick, because that situation is one of the biggest issues in crypto right now, in my view, especially with price movements. Let's look at the chart for Bitcoin Cash, because I was, like I said, I was trading this. So let's look at this. Here it is. So a pullback to $590. So I've marked out the previous high and the high before that, which have provided great support and resistance levels. So this move up here to the first dotted line at about $590, if you look back on previous videos from this week, this is where I sold some Bitcoin Cash, right? With the intention of buying it back when it inevitably pulled back down again. This pump up, as I said, was likely people buying it up because they wanted some free money if the network split. And once that had served its purpose, that would be a sell-off of all the excess coins and a pullback to normality. So that's why I sold just there. Yeah, granted, it wasn't the top, but we can see it's now pulled right back to that point again, validating that resistance line. So price couldn't hold above the line I marked out and sold at for more than a day. So there we jolly well go. We can actually look at these Poloniex markets as well. If I've got, where's my Poloniex chart? There it is. Poloniex, this is the market for the sort of the futures, if you like, the futures for the split coins if Bitcoin Cash does actually split. If you look at this box down the right hand side here, we can see that Bitcoin ABC and Bitcoin SV, the potential future split coins, are listed for trading. Now Bitcoin ABC is much closer to the market price of Bitcoin Cash as it currently is. So Bitcoin Cash currently trading at $583, Bitcoin ABC trading at $521, Bitcoin SV just trading just slightly below $60. Absolutely brutal. So market sentiment there clearly favoring Bitcoin ABC as the coin of choice, like the real Bitcoin Cash, if that's even a thing, right? But we'll see. Not everyone, not the whole market hasn't voted yet. That's why I said I wouldn't trade this. Really, that's just traders on Poloniex that are giving their perspective on that. But until people get hold of the real coins and then decide which one they want to keep and which one they want to sell, that'll be when the whole market decides if the network splits at all. So we'll see what's going to happen with that. On to the next story. The SEC charges the founder of decentralized exchange EtherDelta with operating an unregistered national securities exchange. This has been reported everywhere, like dozens and dozens of news outlets, but I'll just refer you to the Crypto Globe article, which is SEC brings charges against founder of decentralized exchange EtherDelta for operating this unregistered national securities exchange. So the bugaboo is that, they listed tokens that the SEC deemed were securities. And they say here, quote, EtherDelta provided a marketplace for bringing together buyers and sellers for digital asset securities through the combined use of an order book, a website that displays orders, and a smart contract running on the Ethereum blockchain. Close quote. Yes, I say, but which action exactly are they getting done for? They, he, the guy, the one guy, the founder. Exactly which action is it that he took is the offense, right? What's he getting done for exactly? Is it setting up the website which provides the user interface for the smart contract? Is it registering EtherDelta.com? Is it the publishing of the smart contract itself to the Ethereum blockchain? What? Which one of those actions specifically is the offense? It's not clear to me. Even having read 12 articles and a whole bunch of other stuff on the net this morning about this, it's still not clear to me, right? There is one indication from one of the articles that I read where, because he was the exclusive coder of the smart contract, he uploaded the contract to the Ethereum blockchain and so on and so forth, and was collecting fees from it. There was a clear controller, if you like, of it. But even then, the guy sold it. So there's something else in here. It says here, let's quote again, "The EtherDelta founder, without any admission of denial of guilt, apparently consented to the order from the SEC and agreed to pay $300,000 in disgorgements, plus $13,000 in pre-judgment interest, plus $75,000 penalty," close quote. So that's from the Crypto Globe article. So the SEC says that had he not cooperated, the penalty imposed on him would have been greater. So disgorgements, that's like profit from ill-gotten gains is kind of the technical definition of that. So they're saying, 300 grand is because you collected fees from EtherDelta trades that were on securities and the exchange wasn't registered. So that's ill-gotten gains, apparently. Now, many have been quick to point out that this charge was against an individual, right? The founder of EtherDelta, who wrote the code and launched it originally, but who later sold the business to someone else. So right now, as I speak to you, EtherDelta.com is rocking and rolling, right? Look at it. It's fine. It's running. That's not the issue. The issue the SEC has is with this dude failing to register the exchange with them, right? And now for the customary statement of principle, which you can often expect from me. So you cannot ultimately accomplish anything by force. As soon as the SEC nailed down that specific action that was deemed to be an offense, the blockchain hackers of the world will just go straight to work building a new system that works around that. We just know that's going to happen, right? We only have to look back at the Napster, Kazaa, to LimeWire, to BitTorrent period of history to see that the hackers will ultimately win, right? And if there's demand from the people who want to use these decentralized exchanges, then the hackers of the world will provide. Now, if the regulators truly want to protect investors, which is what they constantly state to be their intention behind these enforcement actions, and to their very purpose for being, they're going about it the wrong way, in my view. Ultimately, the only way to protect investors is to educate them and limit the legal enforcement actions to offenses that have identifiable victims. The founder of EtherDelta in this case has just been fined for basically failing to carry out a piece of government administration, not defrauding anybody, right? That's not the case here. It's specifically failing to basically do some paperwork. That's what the guys got done for. So when you look at it from that point of view, the whole approach seems broken, doesn't it? So I'm going to make a prediction here. I predict that before long, we'll see some anonymous group of developers deploy a new decentralized exchange. I predict that they will also anonymously publish the source code so that the exchange can be trusted to perform as expected without you having to know who the developers are. Think Bitcoin, think Satoshi Nakamoto. I then predict that the regulators will do exactly what they did in the Napster days, or the Napster war, let's call it. They'll start going after the people that they can identify, the users, right? This took the form of prosecuting people for copyright infringement. When people downloaded music from BitTorrent, because you can't prosecute the network or any of that, the regulators and the law enforcement folks went after the individuals. And then there was a bit of PR, like someone gets fined, whatever it was, several $100,000 for downloading an album from BitTorrent, and that supposedly scared everybody else into not using it, even though you couldn't actually stop the system itself. So I can see the regulators hauling people in for trading on exchanges that are unregistered, so which would make it illegal for people to use the unregistered exchanges rather than forcing the exchanges to register. So that's just my prediction, and I'm mapping over the past patterns from the Napster to BitTorrent days onto this, because it looks very, very similar to me. And I'm not going to have any hand in this. I'm a commentator, I'm an observer, and all I do is offer the results of my observations. So that's my observation of how the hackers behave historically, how the users behave, and how the regulators behave. That's what I see, and that's what I see happening again going forward. On to the next story. EOS Referendum Contract launches in beta form. This is a big milestone for EOS. You can read about this on the Medium blog for EOS Nation if you wish, but I'll give you the summary of this. The referendum contract basically allows EOS token holders to vote on stuff, right? It basically enables two major things on the EOS network, which will rapidly accelerate its evolution. The first thing is the ability to propose projects and have the community vote on whether those projects should be funded by a portion of the EOS block reward. The second thing is the ability to vote on major network issues, which could be anything, right? We have the ability to vote on block producers already, but you can't really vote on anything else. That's what the referendum contract will allow. You can test this system right now. You can test it at blocks.io if you wish, which is bloks.io. On the main menu, if you click on vote, you get three options: vote for block producers, vote for proxies, or referendums. So here's referendums. There's a whole bunch of test referendum contracts here and proposals. And if you just connect with Scatter, you can either approve or decline it, see the status of any of these proposals, how much EOS has voted for or against, whether the proposal has hit the 15% minimum, and on we go. So you can play with that. This is a big piece to the EOS puzzle, especially since one of the unique selling points of EOS prior to launch was that EOS was the governed blockchain, governed by the token holders, whereas it hasn't been able to be governed by the people because there's no way to vote on major issues. That's why the referendum contract is a big deal. Now it's in beta form. It's not ready to be used like in proper votes yet, but this is a major milestone. It's been deployed in beta form to the mainnet, and now we can start playing with it. So it's only a matter of time before that's perfected, and then real proposals can be start voting on the mainnet. Now that is actually all I've got for you today. There is a lot more to talk about in terms of the news, but I burnt up so much time researching the EtherDelta SEC issue that I've got to get today's video out so I can start preparing for the live stream, which is going live this evening. So Fridays is a bit packed for me since I need to make two videos, one for the daily video and then prepare for the live stream. Today I'm interviewing the Omni app about their integration with XRP. So I hope you will join me for that. I'm also continuing to perfect the visual presentation of the show, so feel free to give me some constructive feedback on that down in the comments. But that's all I've got for you today. If you like this episode, go ahead and hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback, and I would very much appreciate it if you would hit that subscribe button. Also be sure to check out my online store, because there's a bunch of products on there that bear the Cryptoverse branding. I would appreciate that, because your purchase from the online store will help to keep this channel going. Other than that, I hope you'll join me for the live stream later on, or on the next episode of the Cryptoverse. But until then, it's me, Chris Coney, saying bye for now.